Now I am going to teach you accounting for hire purchase and installment sale transactions. Before we go into accounting aspect, let us understand why hire purchase or installment transactions is required for the business, also for the consumer. The purchasing power of the individual is not affordable to buy high value products such as house, car, jewelry or any equipment for the business, and hence the businesses have come forward to provide this facility to the consumers to use the product or take the product on installment basis. Let us understand what is the major difference between these two types of transactions. One is Governing Act. Governing Act. Hire purchase is governed by Hire Purchase Act 1972, and in case of installment it is governed by Sale of Goods Act 1930. Nature of the contract. Hire purchase is hire purchase agreement. In case of installment sale, it is agreement of sale. Coming to passing of title, or you can also say ownership. Ownership is transferred to the buyer on payment of last installment in case of hire purchase, whereas in case of installment sale, it is as good as the product is sold, so it is transferred immediately. Coming to right to return. As I said, the ownership is not transferred to a buyer in case of hire purchase, so the right to return is always there in case of hire purchase, because the ownership, I do not have the ownership, so I will return the product. In case of Sale of Goods Act, the goods is already sold, so the return cannot happen unless there is any major manufacturing defect or any mistake in the product deliverables. And coming to seller's right to repossess, where the ownership is not transferred, the right remains with the seller, and hence seller will have always right to take the repossession of the goods. Suppose if the buyer defaults any installment, so it is available in case of hire purchase because the ownership still lies with the sellers. And in case of installment sale, the ownership is transferred to the buyer, so seller cannot repossess the product without, he cannot take the repossession of the goods. Coming to right to disposal. Where the ownership is not transferred, there is no right of disposal by the buyer. In case of installment sale, the right in the product of goods has been transferred to the buyer, and hence the seller can dispose of the goods as per his wish. And responsibility of risk of loss. Again, in case of hire purchase, the risk of loss lies with the owner. Here owner is the seller, so the risk of loss is with the seller, but the possession of the goods is with the hire purchaser, so he has to take all care that the product is safeguarded. Beyond his control, if something happens, then he will not be responsible. But in case of installment sale, the ownership is already transferred to the buyer, so the risk of loss also is transferred to the buyer. Now let us understand what kind of terms are there available in the hire purchase agreement, because based upon those terms we will have to make our accounting entries. Okay, so broadly the following terms will be written in the hire purchase agreement. So first, the agreement contains who is the hire vendor, who is the hirer, or also called hire purchaser. Hire vendor means the person who is selling the product, and hirer or hire purchaser means the person who is buying the product. Okay, and cash price. Cash price is nothing but the price at which the product is sold. It has got no other elements, it is only a product at which, suppose if I go to the shop and purchase a product, then it is called cash price. By giving the cash across the counter, then it is cash price. Then coming to down payment. In case of hire purchase, when the product is sold on installment basis, there will be hire vendor decides certain amount as down payment. This price down payment will be decided based upon the product which he is selling, duration of the installments. All these criteria he will consider, and risk of loss of the product. there are various criteria. So some people will decide 20%, some people will decide 25%, some people will decide 30%, 40%, depending upon the demand for the product. Also various criteria are taken into consideration while deciding the down payment aspect. So there is no particular norm that down payment is always this much only. Suppose if when we purchase a house on installment, that is when we take a home loan, so banks have, RBI has given a guideline saying that 20% customer has to contribute, 80% bank can provide minimum. So some banks they extend 25%, some banks 20%, some will have their own norms that we will pay registration. So it depends upon the business to business, and there is no particular guideline what will be the percentage of down payment, and it depends upon the various criteria decided by the vendor. And what is hire purchase installment? Hire purchase installment is the amount which is paid by the hire purchaser over a period of time in particular installments, I mean in particular intervals of period. Okay, and this hire purchase installment contains cash price of installment and interest. Cash price of installment plus interest in each installment. Okay, and what is hire purchase price? Hire purchase price is nothing but total price paid by hire or hire purchaser. Total price. What is total price? He pays down payment plus he pays hire purchase installments. Okay, this is called nothing but hire purchase price. Now, before we take into accounting, we should see in particular given problem, in a particular given problem, whether all the items are available for us to account, or we need to work out any of the amounts which are not given in the problem. So let us take one example and understand how these elements can be worked out, and we can go for accounting. Okay. I will take one simple example. See, X purchased machinery and down payment is 70,000. Okay. And installment 1 53,000. Okay, and second installment is installment 2 is 49,000, and installment 3 is 55,000. Okay, this is first year, second year, third year, and interest is 10% per annum. Interest, if nothing is defined, it is always per annum. Okay. Now let us see whether all these values are available here for us to do the accounting. Cash price. Do we have cash price here? What is cash price? Cash price is nothing but the price at which the product is normally sold. But I have down payment, I have installment, if I add all these installments and down payment, I get higher purchase price. Correct? If I add these three installments and down payment, then I get higher purchase price. So I have to identify cash price. So to identify cash price, we should know what is the interest element in the higher installment price, a higher purchase installment. Okay. See, we know installments. This is nothing but higher purchase installment. This is nothing but higher purchase installment. Okay, all these three. So what we discussed is hire purchase installment means cash price of the installment plus interest in each installment. So we know interest is given 10% per annum. We know installment. Okay. Now we have to identify what is the cash price in each of these installments. Then I will be able to identify the total cash price. Okay. So let us work out how cash price can be identified from the installments. So here 10% is given. If we see here 53,000 installment 1, it has got installment amount and also interest. Whether you try to understand, this is very critical in this working. Why we should calculate interest when I am at the end of the first year. The total amount outstanding is cash price minus down payment is the outstanding at the end of the first year. Okay, cash price minus down payment is the outstanding at the end of first year. Okay, do I know cash price? I do not know. Do I know down payment? Yes, I know down payment. And outstanding at the end of first year, I also don't know, because I don't know what is the cash price involved in the next two installments also. So we have to, same situation comes at second year also. I do not know what is the cash price outstanding at the end of the second year. So what we have to do is here, first we have to work out the cash price involved in the last installment. Why it is to be worked out from last installment is because in the last installment you have only one cash price and one interest on that amount. Understand? In this you have only one cash price, there is no further installment, so there is no further cash price, so there is only one cash price and one interest. So first we have to take installment 3, 55,000. So what this example says is, at the end of third year you are supposed to pay me 55,000 including interest. So what is the interest I have paid for in this 55,000? It includes interest plus cash price. So my interest is 10%. Okay. So this amount principal plus interest, and what I want to identify is interest. Okay. This is I, this is P plus this is interest. You understand? In this installment, there is 100 rupees of cash price plus 10 rupees of interest. This put together I am paying 55,000. Okay. Now I wanted what is the installment. I can always calculate what is even cash price also. If I do into 100 I get cash price. If I do into 10 I get interest. Okay. Let me identify the interest. So here I will get 5,000 as interest. If out of 55,000 of hire purchase installment, 5,000 is the interest, then what is the cash price of the installment is 50,000. Okay. Now you understand? So this is the interest in installment 3 and this is the cash price in installment 6. Now I know what is the cash price involved in the at the beginning of the third year. This is at the beginning of the third year. At the beginning of the third year, I was supposed to pay cash price of 50,000 to the vendor. Okay. That I am paying at the end of the year with 10% interest at 5,000, adding 5,000 total, I am paying 55,000. So I know at the beginning of the third year, that is at the end of the second year, 50,000 I have the cash price due and 5,000 I have to pay interest for the 1 year. Now coming to installment 2. So at installment 2, the given problem says, example says 49,000 is the installment amount. Okay. This when I am paying at the end of the second year. at the end of the second year I am paying 49,000 as installment. So this particular interest amount includes the outstanding at the beginning of the second year. Try to understand clearly, please listen carefully. At the beginning of the second year, the total amount outstanding will be cash price of installment 2, cash price of installment 3 plus interest of second year. So at the beginning of the second year, I have only paid 1 year of the cash price. So next 2 years of cash price is outstanding, and interest will be calculated next two installments interest for 1 year. Okay, are you getting my point? At the beginning of the second year, I have only paid cash price of one installment, that installment 1. Okay. Now at the beginning of the second year, I have two cash prices, that is installment 2 cash price, installment 3 cash price plus interest on installment 2 cash price and installment 3 cash price for 1 year, because at the third year I will be paying for the third year on the beginning of the third year outstanding balance. Okay, so installment 2 49,000 plus cash price of third installment is 50,000. Total at the beginning of the second year it will be 99,000 is the outstanding. Okay, if I have to identify same exercise, if I do 100 plus 10 into 10, okay, now this comes to 9,000 and here 90,000. 99,000 includes 1 year interest on two cash prices, that is installment 2 cash price, installment 3 cash price, and interest is for 1 year of year 2. Okay, so in this case my outstanding at the beginning of the second year is 90,000. Okay, what I have done, what is the installment of installment 2 second year 49,000, cash price third year which I have identified here, I have added that, and the total amount is coming to 99,000. So if I arrive at the interest with the same formula, it is coming to 9,000, and from 99,000 if I deduct 9,000, it is 90,000 cash price. This is cash price at the beginning of the second year. Okay, same principle we follow for identifying the interest of first year. So here what is my beginning outstanding at the what is the installment here? 53,000. Installment 1 is 53,000, cash price of installment 2 and installment 3 is 90,000. Total outstanding at the beginning of the year at the beginning of the year 1 is 1,43,000 including interest. So 100 divided by 10 into 10, this come to 14,300 interest. If I remove 14,300, then $1,18,700. Okay, 1,18,700. This is the principal outstanding. Okay, sorry. I think it comes to 13,000. 110. 13,000. So 1,30,000 will be the principal. 1,43,000 divided by 110 into 10, it comes to 13,000 interest, and 1,30,000 will be the cash price. Okay. Now what is this is the cash price of the installments. Okay. And now what is the actual cash price? So apart from 1,30,000, I will write it here. Apart from 1,30,000, I paid down payment of 70,000. So total cash price of the product is 2 lakhs. Okay, total cash price of the product is 2 lakhs, and interest 5,000, 9,000 and 13,000. So 27,000 is the interest. So if I add up all the installments, so 2 lakh, this is coming 2,27,000. So if